Donald Trump is once again targeting Canada. This time, he announced that all trade negotiations with Ottawa are being halted and that within the next 7 days, he will impose harsh tariffs on Canadian goods. But the most interesting part is not just about money. For Canada, this is a matter of international status, a chance to prove it can act independently. Trump, however, seems to view it as nothing more than empty ambition. In this video, we'll break down what sparked the conflict, how it could escalate into a full-scale trade war, and why this standoff could reshape America's relationships with all of its allies. So stay tuned until the end. After months of discussion, Canada introduced a new tax, the so-called Digital Services Tax. This is a 3% levy on the revenue that large tech companies earn from digital services provided within Canada. That includes income from online advertising, social media, digital marketplaces, and the sale of user data. The tax officially took effect on June 28, 2025, but companies will begin paying it starting June 30th, when the new work week begins. It targets only the largest corporations, those with global revenues above 750 million euros and at least 20 million Canadian dollars in digital service sales within Canada. What's truly surprising is that the tax was implemented just after the G7 summit. Despite criticism, Canada made it clear that it's not backing down. So the question is, what is happening between the US and its allies? Canada argues that the tax is about restoring fairness. Foreign tech giants often avoid the same taxes that local businesses are required to pay. The government expects to collect around $2 billion between 2025 and 2027. But for the United States, this looked like a direct attack on American companies. Trump called it a blatant assault on our country and claimed Canada is trying to shield its tech sector from fair competition. Tensions escalated rapidly. The tax itself may seem small, so why did it spark such a heated trade conflict? The answer is simple. It affects the profits of giants like Amazon, Google, Meta, and Microsoft, each of which earns tens of millions of dollars in Canada. US officials saw the tax not just as a new levy, but as an attempt by Canada to wall off its market. So what will Trump do next? Let's take a look. On June 27th, Trump posted on Truth Social and spoke at a press conference, declaring that all trade talks with Canada are immediately suspended. He said that with the introduction of the DST, Canada had crossed a line. Within 7 days, he vowed to announce new tariffs on Canadian goods. This isn't the first time Trump has taken such a hard line. He often walks out of talks to increase pressure. But the 7-day ultimatum stunned the markets. Companies began speculating on which goods would be affected and how high the tariffs might go. The situation looked serious, but many were skeptical. During his first presidency, Trump made dramatic threats more than once, only to back down later. In Washington, there's even a meme, TACO, Trump always chickens out. So, will this be another empty threat? Or will he follow through and hit Canada's economy with billions in penalties? That uncertainty triggered an immediate market reaction. As soon as Trump made his announcement, financial markets responded. That same day, US stock indexes dropped sharply. Both the S&P 500 and NASDAQ fell in early trading, but later not only recovered, they actually closed at record highs. The S&P 500 reached 6,173 points, and the NASDAQ hit 20,273. Even the Dow Jones remained at its peak. But on the Canadian exchange, the picture was gloomier. The S&P/TSX index, which had been rising for 2 weeks, slipped by 0.2% by the end of the day. Resource and consumer sector companies were hit hardest, especially gold miners, as gold prices sharply declined. Colin Cieszinski, a strategist at SIA Wealth Management in Toronto, admitted it felt like a bolt from the blue. Just when it seemed the worst was over and everyone hoped for calm, this shock came. According to him, Trump's statement caught the market off guard. It shows how investors perceive trade war threats. First comes panic, then realization. Trump has often made bold statements without following through. Besides, today's market is driven by other forces: explosive growth in AI companies and expectations that the Federal Reserve will keep interest rates low. So traders concluded this was more show than real threat. Still, a warning was issued. If Trump does impose tariffs, It could disrupt logistics and slash corporate profits. In that case, market declines would no longer be temporary, they'd be real. Investors are now watching every move closely, and this isn't the first time the US and Canada have clashed over trade. The digital tax dispute didn't come out of nowhere. Earlier in 2025, the US imposed tariffs on Canadian steel and aluminum, citing national security concerns. In response, Canada invoked provisions of the USMCA trade agreement and hit back with tariffs on American exports, specifically dairy and poultry products. That marked the start of a prolonged conflict few ordinary Americans or Canadians really understood the purpose of. Why did Trump start this trade war? Now, the digital services tax feels like a new chapter in an old story. But this time, it's not about physical goods like steel or milk. It's about revenues from digital services. And that's a whole new level. These flows are harder to track, harder to avoid, and are central to the modern economy. Some experts believe history is simply repeating itself. Others argue that this time the stakes are much higher, and the damage could be far more severe if the conflict drags on. Is this just another cycle of threats and countermeasures, or the beginning of a real crisis? That's what observers are trying to figure out. What's most interesting is that Trump has repeatedly said the US holds all the cards in trade with Canada. And surprisingly, even Canadian officials acknowledge that. He believes the US can exert pressure because Canada's economy is heavily dependent on the American market. But what do the numbers say? Canada is the United States' second-largest trading partner. Nearly $762 billion in goods cross the border each year. About 75% of all Canadian exports go to the US. Canada also supplies around 18% of America's oil imports, a critical factor in keeping domestic energy prices in check. So, a trade war would hit more than just Canada. Factories in Michigan and Ontario are deeply intertwined. Car parts cross the border multiple times before a vehicle is fully assembled. Tariffs would raise prices and cut jobs on both sides of the border. US agriculture is also at risk. Canada imports a significant amount of American dairy, poultry, and grain. If Ottawa retaliates again, American farmers could suffer greatly, and Canada could go even further, imposing restrictions on tech sector investments and cross-border data flows. That would open an entirely new front. So yes, the US has powerful economic levers, but Canada also holds critical cards in energy, manufacturing, and potential retaliatory tariffs. If this conflict spirals out of control, both economies will take a hit. At first glance, the 3% DST might seem minor, but when applied to the tens of billions of dollars in revenue generated by each tech giant, it becomes quite substantial. Each company could end up paying around $15 million per year, and overall, Canada hopes to collect about $2 billion over 5 years. While that's a drop in the bucket compared to the size of the Canadian economy, the political weight of this tax is enormous. It's not just about revenue, it's about influence. Trump sees the tax as a challenge to American dominance, while Canada views it as a chance to assert its independence. So how could this play out? One option is that Canada backs down and freezes the DST while waiting for a global agreement under the OECD. In that case, Trump might return to negotiations and even roll back tariffs on steel and aluminum. A second scenario is that Canada stands firm and Trump follows through with tariffs. That would launch a full-blown trade war, hurting both sides. A third path would be to bring the dispute to the USMCA's conflict resolution mechanism. That could lead to a compromise. Canada might slightly reduce the tax rate, and the US would drop its harsher sanctions. Finally, the case could be brought to the World Trade Organization. But then, the process could take years to resolve. But Trump didn't stop at words. He issued a firm ultimatum. Within 7 days, the US will announce exactly which Canadian goods will be subject to new tariffs. That gave businesses in both countries very little time to prepare or adjust their supply chains. Trump's team signaled that key sectors would be targeted: dairy, lumber, and aluminum. These are pillars of Canada's economy, and there's nothing random about these threats. Disputes over dairy have dragged on for years. Lumber is another sensitive topic, with long-standing tensions over subsidies and pricing. As for aluminum, it's a strategic resource, and Canada is one of the United States' largest suppliers. While the US-Canada trade conflict was heating up, something unexpected happened elsewhere. Almost simultaneously with the escalation, the White House announced a new deal with China, this time concerning rare earth metals. The agreement could help the US reduce its reliance on Canada and other allies for key resources. The deal itself was significant, but the timing raised eyebrows. It looked like Washington was sending a message not just to Ottawa. If allies refuse to play by American rules, the US will find new partners. And China, it seems, was quick to seize the opportunity, improving trade ties with the US just as relations with Canada soured. For investors, it was a moment of confusion. On one hand, the US was punishing a close ally. On the other, it was shaking hands with its main strategic rival. Mixed signals like that undermine the one thing markets value most: predictability. And right now, it's simply not there. This episode with Canada could affect how other countries do business with the US. Europe may pause its own digital tax plans. Japan might start seeking guarantees. If this becomes a pattern, US allies could begin adjusting their policies, not out of partnership, but out of fear. After Trump publicly halted all negotiations with Canada and called the digital tax a direct attack, Canada finally responded, but did so without shouting or aggression. Prime Minister Mark Carney's office issued a brief statement. The Canadian government will continue to engage in these complex negotiations with the United States, guided by the interests of Canadian workers and businesses. The calm tone did not mean Canada had given up. Finance Minister François-Philippe Champagne had already stated that the tax could still become part of a broader deal with the US. But now that Trump has officially ended talks, that path is temporarily closed. Meanwhile, Canadian business leaders are sounding the alarm. The Business Council of Canada stated that they had been warning about this for months. If Canada moves forward without a global agreement, the United States will inevitably respond, and that response will hurt the economy. Now that scenario is starting to unfold. The Council is urging the government to act quickly and is even suggesting the tax be repealed, but only if the United States drops its threat to impose tariffs. The clock is ticking. Both sides are under pressure. Either push the conflict to its peak or search for a way out. One thing is clear. This is no longer just a dispute over a digital tax. It's a question of power, national pride, and who will set the rules for global trade. Trump may believe the United States holds all the cards, but in a global economy, even a 3% tax can shift the balance of power. That's why this trade conflict could explode at any moment. So subscribe to the channel and turn on notifications to stay updated on what happens next.